Imagine two people walking into the same bank on the same day. One waits nearly an hour to speak with someone, while the other is greeted by name before they even reach the desk. Same bank, same building, same employees. Completely different experience. Why? Because banks don't see people the way people see people. Banks see numbers, balances, income patterns, credit history, risk, and profitability. Today, we're going to walk through 8 financial levels, from an overdrawn account to private banking. By the end, you'll understand something most people never realize. The bank isn't changing. The way it responds to you is. Level 1. Overdrawn. It starts with something small, maybe a forgotten subscription renewed overnight. Maybe a coffee app charged your card. Maybe you simply forgot. You check your banking app and see a minus sign, -$4. Not -400, not -4,000, just $4. But the banking system doesn't care about the size of the mistake. It only cares that you crossed the line. Within hours, an overdraft fee appears. Suddenly, a tiny mistake becomes a much bigger problem. You call customer service. A recorded voice thanks you for being a valued customer, and then places you on hold. You wait and wait. Finally, someone answers. They're polite and professional, but the answer is still no. The fee stays. The next payment hits, another charge arrives, and now you're even deeper in the hole. A small financial problem starts creating larger financial problems. You skip meals, delay bills, and push expenses into next week. That's when you learn a lesson most wealthy people forgot years ago. Being short on money is expensive. The less money you have, the less room you have for mistakes. At this level, you're not treated like an opportunity. You're treated like a risk. Level 2. A few $100s. Eventually, you recover. The account isn't negative anymore. You worked overtime, picked up extra shifts, and cut spending. Now there's a few $100s sitting in the account. Not much, but enough to breathe. At least that's what you think. Then another fee appears. A monthly maintenance fee, an account fee, a service fee. Whatever name they give it, the money disappears quietly. No phone call, no explanation, just gone. The requirement to avoid the fee is a balance much larger than what you can maintain, so the fee remains. You apply for a credit card, and the bank offers a secured card. In simple terms, they want your money first before trusting you with theirs. Then life happens. Your car needs repairs. Your phone breaks. An unexpected bill arrives. Life doesn't ask whether you're ready. It simply sends the invoice. At this level, the bank isn't working against you. It's simply not working for you either. You're another account, another number, nothing more. Level 3. Consistent income. Something interesting happens when your paycheck starts arriving consistently. Not necessarily a huge paycheck, just reliable, predictable, month after month. The system notices. Not because anyone is watching you personally, but because computers are watching patterns. Suddenly, certain fees disappear. Credit card offers begin arriving. Pre-approved offers, higher limits, better products. The same institution that barely acknowledged you 6 months ago now wants your business. You didn't become smarter. You didn't become more deserving. Your financial profile simply became more attractive. That's the first time many people realize how banks think. Banks don't reward effort. They reward predictability. Predictable customers are profitable customers, and profitable customers receive attention. Level 4, 5 figures. Now there's real money in the account. Not enough to retire, not enough to stop working, but enough to create options. You notice your credit limit increasing without asking. The bank begins offering better products, better rates, and more flexibility. One day a fee appears. You call, and the issue gets fixed surprisingly fast. The experience feels different because it is different. When your financial profile improves, solving problems becomes easier. The exact same issue that once required multiple phone calls now gets handled in a single conversation. For the first time, you begin experiencing convenience. And convenience has value. A value most people don't notice until they finally have it. Level 5. Preferred client. Around this level, something changes. The bank starts calling you a preferred customer. Maybe they use a different word: preferred, premier, priority, gold, but the meaning is the same. You've entered a category worth protecting. You receive invitations, personal emails, and dedicated phone numbers. Someone actually remembers your name. If another bank offers you a better deal, your current bank suddenly becomes very interested in keeping you. Why? Because customer acquisition is expensive and losing profitable customers hurts. At lower levels, you chased the bank. At this level, the bank starts chasing you. Final thought. Somewhere tonight, someone is staring at a negative bank balance. They're worried, frustrated, and exhausted, trying to figure out how a small mistake became a much larger problem. At the exact same moment, someone else is sitting across a table from a private banker discussing investment opportunities. Same industry, same system, completely different experience. The important lesson isn't that wealthy people receive better treatment. The important lesson isn't that wealthy people receive better treatment. Most people already know that. The real lesson is understanding why. Financial institutions are businesses. Businesses follow incentives, and incentives follow money. Your value as a human being never changes, but your value to a financial institution changes dramatically depending on the numbers attached to your name. The bank doesn't decide who you are. The bank decides how much attention you're worth. And those are two very different things. The important lesson isn't that wealthy people receive better treatment. Most people already know that. The real lesson is understanding why. Financial institutions are businesses. Businesses follow incentives, and incentives follow money. Your value as a human being never changes, but your value to a financial institution changes dramatically depending on the numbers attached to your name. The bank doesn't decide who you are. The bank decides how much attention you're worth. And those are two very different things.